Now, if I had to bet on one stock or one fund to put my entire earnings and my future earnings and my life savings in, it would be VOO. Ladies and gentlemen, the results are in, and the three funds with the highest capital inflows in 2021 are all index funds. Now, this makes me extremely happy because I've been pushing index funds to all of my family and friends for years, and I've also been pushing index funds on this YouTube channel. So when I read this article on Seeking Alpha yesterday, stating that the top three funds in terms of capital inflows were all index funds, it honestly made me really happy. What made me even more happy is that 2 out of the 3 funds with the most amount of capital inflows were S&P 500 index funds, which I think is the best investment on the planet, pound for pound. The 3 index funds with the largest capital inflows in 2021 are Vanguard's S&P 500 ETF, which trades under ticker symbol VOO. In second place, we had the Vanguard Total Stock Market ETF, ticker symbol VTI. And in third place was the Spider S&P 500 ETF, which trades under ticker symbol SPY. VOO brought in $46.55 billion in 2021. VTI took in $44.08 billion in 2021. And SPY took in $35.21 billion, according to data from ETF.com. Now, it's important to note that VOO and SPY are both S&P 500 based index funds. They both literally track the S&P 500. And ladies and gentlemen, the S&P 500 had a record year. In 2021, the S&P 500 finished up 27%, which is absolutely incredible. The fact that all you had to do at the beginning of 2021 was buy an index fund like VOO or SPY, and you'd be sitting on 27% gains on the year is absolutely mind-blowing. In fact, in 2021, the S&P 500 outperformed the NASDAQ and the Dow Jones for only the 6th time in history. And if you still aren't investing in the stock market, or if you are investing in the stock market but you just can't seem to pick the right stocks, you need to start investing in an S&P 500 index fund like VOO or SPY, or even a total stock market index fund like VTI as soon as possible. As someone who's worked on a trading floor and as someone who's worked in the asset management industry for over 10 years, I can honestly tell you that investing in the S&P 500 index fund is literally a no-brainer. You don't have to be an excellent stock picker. As a matter of fact, you don't even have to pick stocks. You don't need to do a bunch of research, and all you need to do is allocate a portion of your paycheck every single month and contribute it towards an S&P 500 index fund ETF. Seriously, people, just do it. There literally is no reason not to. Okay, so the reason that I wanted to make this video is to give you all 3 reasons that you should strongly consider buying an index fund, particularly one of the 3 index funds that I've mentioned in this video. As a refresher, both VOO and SPY track the S&P 500 index and are made up of the 500 biggest companies in the United States. And VTI tracks the entire market and provides a much broader and balanced return. With VTI, you'll get exposure to large, mid, and small cap stocks, where with the S&P 500, you only get 500 stocks. VTI holds 4,160 stocks. And VTI is no slouch. The fund actually returned 24% in 2021. But for purposes of this video, I'm going to mainly be referencing an S&P 500 index fund, VOO to be exact, because it's my favorite investment in the whole world. Now, if I had to bet on one stock or one fund to put my entire earnings and my future earnings and my life savings in, it would be VOO. All right, enough of the chitter chatter. Let's jump straight into the video. The first and obvious benefit of buying an index fund is the broad diversification that you get. So many people spend so much time trying to pick stocks only to be left disappointed and left with a portfolio that didn't even outperform the S&P 500. Seriously, I want all of you watching to go back and look at your 1 year, 3 year, 5 year, or even your 10-year returns and tell me if you have been able to outperform the S&P 500. Instead of buying individual stocks, just buy the entire market by investing in a fund like VOO that invests in 500 different companies through one simple ETF. Amongst other things, investing in an S&P 500 ETF ensures that the value of your portfolio is not overly correlated with the fortunes of any one company. Now here's a list of the top 10 holdings in VOO, which is the Vanguard S&P 500 ETF. The biggest holdings in the fund are companies like Apple, Microsoft, Alphabet, Amazon, and Tesla. And an index fund like VOO not only offers stock diversification, you also get sector diversification, as you can see from this list. You're getting exposure to communication services, consumer discretionary, consumer staples, energy, financials, healthcare, information technology, literally everything. The second major benefit of investing in index funds is that the cost, including taxes and management fees, are typically lower than those associated with other types of investment funds. Perhaps the biggest cost to consider when investing in any fund, whether it's a mutual fund or an exchange-traded fund, is the management fee of the fund, which is typically stated as an expense ratio. The typical expense ratio for a mutual fund is between 0.7% on the low end and 2% on the high end, depending on which mutual fund we're talking about. Now, that may seem like a low number, but that's up for debate, especially when you compare it to the expense ratios of an index fund. The Vanguard S&P 500 Index Fund, ticker symbol VOO, which I've been talking about throughout this video, has an expense ratio of 0.03%. Ladies and gentlemen, that means that if you invest $10,000 into VOO, you are only paying Vanguard $3 a year to manage $10,000. Now, if you don't find that impressive, I don't know what to tell you. And the reason that index funds have such a low expense ratio as opposed to mutual funds is because that they are passively managed. They simply track an index by buying all of the stocks within that index. And due to the fact that the holdings of the index rarely change, there's very little work required of the index funds manager. So now we know that index funds have extremely low management fees. But another thing that index funds offer is an extremely low turnover ratio, which means that you pay less taxes on capital gains. Index funds typically have a turnover ratio that hovers around 1 to 2% per year, compared to 20% or higher for some actively managed mutual funds. The higher the turnover ratio within a fund means that there's more buying and selling going on. So if a stock sells for a profit within the fund, that profit is considered a capital gain. So simply put, high turnover ratio funds accrue capital gains more frequently, which results in more taxes owed by the fund's investor, you. But thankfully, this isn't much of a concern with index funds, thanks to their low turnover ratios. Now, since fund managers like Vanguard, who manage the S&P 500 Index Fund VOO, since they're not really selling stocks and buying stocks all the time, there are less capital gains to pass through to the shareholders. The third amazing benefit of investing in an S&P 500 index fund like VOO, or even a total stock market index fund like VTI, is that you get really amazing returns. Historically, the S&P 500 index has returned around 10% per year over the past 100 years or so. Now, some years are amazing, like 2021, and some years are not so amazing, like during the global financial crisis. But even when you factor in the not so amazing years, the index still manages to give an average return of 10%. And just to give you guys a little bit of context, only about 20% of actively managed mutual funds actually outperform the S&P 500 over 5 years. Now, there have been numerous studies that confirm this, and that's why investors like Warren Buffett are such strong advocates of S&P 500 index funds. Like I said earlier, so many people that I talk to, especially younger investors, think that they can get higher returns in the S&P 500, and it's not that easy to do. If only 20% of mutual funds are outperforming the S&P 500, and these mutual funds have serious resources at their disposal, I seriously doubt the average investor will be able to outperform the S&P 500, especially over the long term, and especially in a bear market. In summary, S&P 500 index funds and index funds in general are such underrated investment tools. Now, even if you like trading options or if you like trading stocks on the daily, you should still have a portion of your portfolio that is dedicated to an S&P 500 index fund like VOO or SPY, or a total stock market index fund like VTI. Whether you are new to investing or whether you're an experienced investor, index funds are a great asset to add to your portfolio. Now, in my opinion, like I said before, the S&P 500 index fund is the best investment in the world. And once you start investing into an S&P 500 index fund regularly, you can just sit back and watch your money grow. But as always, ladies and gentlemen, please do your own research and your own due diligence. This video is intended to be a part of that research and a part of that due diligence. Well, all right, ladies and gentlemen, thank you all for watching this video, and please let me know your thoughts on index funds because I would really love to hear what you all think. Now, please don't forget to give this video a big thumbs up for the YouTube algorithm, and please don't forget to subscribe to my YouTube channel. Thank you all for watching. I'll see you all next time.